infra, affordable housing push, etc., is all giving us, arguably trying to give a strong push to the cement sector. It's not done for that, but it's a natural beneficiary. Now, here's something that IIFL reported on the 3rd or the 4th, excuse me. So this is a note that came 2 days ago, but it brings out 2 or 3 very important points that they have found out from their channel checks. They see that there is a very strong demand that has come in the months of October, November, December, and that is cushioning the price fall. The end December 2017 price was 3% below expectation. However, volume growth was in double digits in the month of December. And what that would do is that it will push the Q3 volume growth to low double digits versus 0% on a YOY basis. Now, you could argue that the last month or the last quarter of 2016 was a demonetization period, and therefore the volume growth was so abysmal. But still, on a YOY basis, when you compare lower double digits versus 0%, that's a heartening picture. So that is one thing to watch out for. Keep in mind that volumes by and large in the month of December, I read one more note which said that volumes by and large at this point of time tend to pick up because the wholesale companies, because of the year-end target, tend to push out volumes big time, and therefore volumes will pick up. So volumes have already shown a bit of a pickup. If demand comes up, which is a natural thing to happen in this busy season, then that's good news for volumes. What about pricing? And here I borrow a chart from the brokerage note that Antique came out with. Look at that. And while it might be difficult to quite figure out materially what each of these bars is trying to say, the arrows give you an indication of prices as they tend to move up from the month of Jan on to the month of April and May. So consider each of those bunch of bars as prices starting from the January of the year until about April or May, and you will see that consistently, more often than not, you've seen prices moving up in this busy season. There could be 1 or 2 aberrations, as was seen in 2015 wherein prices came off, but by and large prices tend to move up from the month of Jan until April or May. So what happens if you indeed have good demand and if you have prices moving up? It's great for earnings for the cement counters. Now, region-wise trends that we've seen in terms of demand. East India and states like Telangana and Andhra Pradesh are benefiting from low-cost housing and infra demand. So cement companies operating in those areas are benefiting from these particular reasons. There is demand showing signs of improvement in markets of Madhya Pradesh, wherein low-cost housing is at its peak, and Maharashtra, which has been at the forefront when it comes to infra. In fact, if I'm not wrong, there's a report that I read which said Maharashtra accounts for 50% of all infrastructure spending by states currently as of December 2017, excuse me. And while sand availability is impacting construction in few states, in states like Uttar Pradesh, this problem is coming close to resolution. So this may not be a big impact on any of these companies. So there is a natural tailwind to demand. Prices have stayed stable, just about 2 or 3% sub what the expectations were, and the expectation also is that Jan to April you will see prices moving up. So a good combination of demand plus pricing could well spur the stocks up higher. And you've seen the last 1 week chart of almost any stock, or the Friday stock chart of almost any cement company, will show you the kind of flavor or the favor that these stocks are finding. So do watch out for almost all of these mid-size, large-size cement companies. They were in the thick of action in Friday's trade whole of last week. You've seen companies like Sagar, Sanghi and some of the others really spur up in trade. Let's wait and watch if there is more in store. This is Friday, but if you look at the last 1 week, it's been just fabulous for almost all of the cement companies. I just thought I'll end this note with one quick mention of what Motilal Oswal is expecting for Q3 cement, since Shree Cement comes out with numbers today. I've just chosen this one note. It's just in order to show what the street might be expecting. So they expect ACC and Ambuja to post substantial PAT growth. This is PAT growth. So ACC 64%, Ambuja 137%. They expect Shree Cement to be flattish 2% and Ultratech to be 18%. Now you would ask why. I think they mentioned that the JP acquisition is introducing an element of volatility below the EBITDA line, and therefore the top line may be okay, but the bottom line for Ultratech might be disappointing. But by and large, for the top 4 cement companies, they believe 2 out of the 4 will actually show some exceptional numbers. Well, that should bode well for the cement counters. So let's wait and watch if the buoyancy continues in the session today.